Traders, welcome back. Hope you enjoyed the extended weekend. I was already missing the charts. I was already excited to go back and trade, and I was reminded today what a blessing it is to be a trader, because the price action was really easy to read the first half of a day, and you could have been relaxing for 3 days, come back, and you can manage to get a few good setups early and be done again. And I managed to get 2 good setups quite early today, so this was an amazing day. Price action was really easy to read, at least the first part of the day. Later on, there weren't that many setups, but let's talk about how to find high probability setups, because that is our job. Our job is to follow price action rules perfectly so we can identify and safely get to the high probability setups. Now what we can see is that the structure is looking like a range. We have an overnight low, we have an overnight high, so we need to mark the key levels as they may potentially come into play. We are price action traders, so we are not relying on indicators, we're relying on the naked bars as they are printing on a chart. And we need to locate the key entry point, because that's where the high probability setups are going to appear. So as this is right now short and temporary uptrend, I can either draw my trend line like this, but this is not really fitting perfectly. There's a lot of swings that are not confirming the trend line at the bottom, and it's not really making its way all the way down here. Instead, when I was looking at the chart this morning, I had my trend line titled like this, and this really makes the first few swings confirm the trend line. Remember, first 2 swings set up the trend line, and third swing and fourth swing will confirm the trend line. So we have a lot of confirmation for this trend line, and this trend line is fitting nicely. But we have a little bit of a dilemma, because we had an early break for the trend line in new extreme. For that reason, when I was watching this, I already expected a little bit of a correction. I didn't expect continuation of an uptrend. So we have a new high, and we have a first entry long pullback, second entry long. Now this is a 2-legged pullback with the direction of a trend, because the trend is up. But we have a shortened downtrend in play, and we need to draw these shortened corrections because we want to know when it's safe to sell. After we have a break of the shortened downtrend and a new extreme, notice that we have 2 key entry points that are holding price, and we have a higher low. This would have been, under normal circumstances, a high probability setup, higher low after 2-legged pullback, and then we even have new low, first entry short, second entry short failure. This would have been a great entry again, look at it go. But there was a little bit of a dilemma this morning, because we have an early break and new extreme. And a lot of times, before the market will open during pre-market session, you can get early break of the trend line and it may not count. However, you don't know that specifically, you're not sure. Generally, when you get an early break of the trend and it will not count, it generally goes for the big trends. But today wasn't a big trend. Today was a trading range, and we managed to be in the middle of trading range. So for that reason, I decided to focus on this break, focus on the new extreme, and I didn't like taking these setups that would be otherwise good. If there was no break and no new extreme at the time, these trades would be great, but you have to follow the price action. You cannot cherry pick. So with the break and a new extreme, unfortunately, you have to skip these setups. But as the price is right now pushing higher, this is clearly a bullish structure. So at this point now, I'm going to just slightly adjust the trend line, because price is really confirming it nicely at the top. And you guys can see how nicely price is respecting it. And there's nothing wrong with slightly adjusting the trend line. You will probably never draw it correctly at the very first try. You can just tweak it slightly, move it along as more price action is printing. Now you guys can see how EMA is pointing up. This trend line right now is valid because we moved so far up. If this break is valid and we have new extreme, we were supposed to reverse somewhere around here. Instead, price continue pushing higher. So this tells me that since we keep making new highs, new highs, and new highs, this uptrend is valid. So since this is a bullish structure, I'm looking for 2-legged pullbacks, second entries at the key entry points. I'm looking for these setups somewhere around here again. So at this point on, I see price coming from the other side of the channel. I see price pushing lower. So what I'm going to do, same thing I did here. I want to stay on the right side of the market. So I'm going to draw the shortened trend line. I'm going to draw it tight, because this is just a correction part of this bigger trend. And you guys can see price created just a first entry. This right here is a first entry long. It is a first attempt by the bulls to go long after this correction traded lower. So I cannot take this entry. This is not a high probability setup for me to take. Right now, I'm waiting if I can get a second entry, and look what I have. New high, first entry long, pullback, second entry long. We have a micro break and a new low of the downtrend, indicating that the bearish correction played out and I'm safe to buy now. And the exponential moving average keeps holding price. So we are at the key entry point. This is a 2-legged pullback, and this is a big bullish bar. This was the first trade for the day that I tried to enter. Unfortunately, if you didn't get in on engulfing, you would have not been able to catch this without stop using limit orders, because once it formed, it ticked higher, it instantly pushed higher and created a quick easy scalp. But hopefully you guys can see what the high probability setup is. You're not worried about all of these setups pushing higher, far away from these key entry points. You watch these setups, you just sit back and you wait for price to correct, and you see how the key entry point is going to hold. So this is the first second entry long high probability setup with the direction of a trend. Market push higher and then continue pushing lower. Now as I'm watching this, I'm seeing that we're pushing below EMA and we're starting to correct. Even though we have a new low, first entry short, second entry short failure. This second entry short failure worked for a scalp. I'm not going to mark it because once I saw such a big bearish move down and push below EMA, I thought that we may go back and retest this key level, this breakout area, because notice price broke the resistance up here and most of these breakout areas will going to get tested eventually. So once I see a first leg down like this, I'm just going to measure it, copy it, and I expect for price to eventually go and retest the breakout area. I had no idea that price is going to keep pushing lower like that. I didn't know that. I just thought we were going to get to like a pullback. This key level is going to hold and we're going to keep pushing higher, creating a new extreme, but it didn't happen. Price continued pushing lower. Now, this is just a first break of this uptrend. So according to price action rules, we expect for price to create new high, but notice how strongly we are pushing below this key level. We're pushing back in range. So at this time, if we are following the rules, we're starting to think that we may come back into a trading range because overall pattern is range. Even though we have a short-term uptrend right here, the overall pattern structure for the day to start with was range. So as the price is pushing lower, I'm really focusing now on shorts because we really weren't supposed to be pushing that much lower. And since the downtrend is quite strong, I'm going to make the downtrend even slightly wider like this. So you guys can see there is no new extreme being formed just yet. I'm adapting, I'm switching to the range rules, and I expect for price to create a second entry short at the key entry point. Price is strongly pushing above EMA, and right now I have a first entry short but above EMA. When I'm watching this, I'm not taking any entry. This is a high low, but I cannot go long just yet because I have this downtrend that expecting new extreme, and I cannot go short just yet. I have a second entry short, but second entry short right now pushed above EMA. I cannot go short above EMA. We have a break at a new extreme, which is good, but I cannot go short above EMA, so I need to wait, and I see price pushing back below EMA. And notice how the key level right here is coming now into play. It's serving as a resistance. And this was a small little congestion. You guys can see 1, 2, 3, 4, 5 bars stacked. And notice price broke out of this small congestion, pull back, and this is a breakout pullback pattern. This is a lower high after this second entry short. So lower high confirm a second entry short. It is at the key entry point below EMA, and notice how it tested the key level of the day, the high of the day that you found it very early. And this downtrend also needs a new extreme according to trendline rules. So this was my first trade for the day. I treat it as a lower high after two second entry short. I like how the key level is holding price. I like this is the additional way to enter a small congestion, and you guys can see what a quick, easy scalp, simple price action. Price move already too far down to expect new high at this point on. I switched to the range rules. I expected for price to keep pushing to the bottom of a trading range, and this downtrend needed a new extreme. Uptrend played out with the break and new extreme. Perfect price action. Now price created a micro double bottom and strongly reversed back above the EMA. So at this point on, something is changing. We don't have a new low of this downtrend, but we have a double bottom, and that is a lot of times close enough to be considered as a new low. So at this point on, you're going to zoom out and you're going to remind yourself the structure of this market. What is the structure of this market? We can see that we have a range, but we have a bullish imbalance in this range. We didn't manage to push to the midline here, and we didn't manage to push to the midline here again. Price is failing to even make it to the midline. This is telling you there's a lot of buyers in the market, and after price created a double bottom and strongly pushed above EMA, this is indicating that the momentum is changing. And once we now push strongly above EMA, this is where I was expecting to get a new high for this initial first uptrend, because the downtrend played out with the break at a new low following the simple price action, strong push above EMA. So you're combining the trend line rule with the break and new low. You're combining the trading range rule. There's a bullish imbalance, so you expect for price to eventually break higher. And you're following the trend line rule on the first trend line as well, because now you expect the channel to create new high because the bearish correction played out. So as the price is pushing right now higher, I don't think it is safe to take just a high low. What you want to do, you want to take a second entry long or felt second entry short. Now notice price created new low, first entry short, pullback, second entry short. When I was watching this, I didn't take this entry because it didn't really set up the way I would like. And also at the time, I didn't have my key level extended so far. I didn't realize the key level now acts as a support, but it is amazing. Notice how this key level is coming into play. Acted as a breakout pullback here, resistance, and here it acts as a support. So if you combine the EMA key entry point with this key level as a key entry point holding price, is a felt second entry short, and you expect for price to create new extreme combined with the bullish imbalance. However, the body is not touching the EMA. You have a swift break at a new extreme. Didn't really set up perfectly, but context-wise, the entry is great. I'm marking it as a slightly aggressive entry. You quite need to know what you're doing, but this is not a bad entry. I just wish it set up a little bit cleaner, closer to EMA with the more of a bullish body. This would have been better, but price is right now pushing higher. Now, at the time, it wouldn't have this double top. I would have extended my uptrend like this, because this uptrend is right now part of this overall trend. So for that reason, I'm going to draw it wider. So at this point on, we have a new high of this initial uptrend. So we have a double top. So we're going to wait how the EMA is going to act. When I'm watching this and I'm seeing the bullish imbalance and I see such a strong push above EMA, I still believe it is too early to go short just yet. I'm going to draw my shortened trend line. I have a break and I have a first entry long, pullback, second entry long. And once I see EMA holding price like this, and once I see that this shortened uptrend needs new extreme as well, there is still enough room for price to create additional move to a new extreme, because sometimes you get two legs to a new extreme. So if I combine all of these rules in price action and I see how EMA is holding price, this is a decent second entry long. However, the trade that I took, I saw this big bearish bar, new low, first entry short, second entry short. Notice how many shorts piled in and took this short right here against the overall trend. And now you have a new low, first entry short, second entry short failure. You have a failed second entry short. EMA keeps holding price 3 times here. Great big bullish bar. This was the trade that I took, and it was a quick, easy scalp. They actually made a sweat, because notice price triggered a failed second entry short and your stop loss goes 1 tick below the signal bar. I actually got my stop loss right here, and it would be the best put it all the way down here, but this would have been big. You want to really keep it below the entire swing. I kept it below this initial second entry long because there's really only a couple ticks, risking more. So I would rather risk slightly more just to have safer stop. But your stop loss goes 1 tick below the failed second entry short signal bar, and it would have come back and you would have survived just by 1 single tick. And this is why once you decide to take an entry, you cannot monkey with the trade. You cannot monkey with the stop. You're doing your analysis prior to entering trade. This is where you're deciding whether the trade is worth entering. This is when you're doing your analysis. This is when you can afford to overthink, even though you shouldn't overthink. You should just go through the price action rules in your head. But once you take this entry, once you analyze this is a good trade following the rules, which it is because you need new extreme, EMA keeps holding price, it is a failed second entry short, so second entry short against the trend is going to be a trap. Once you enter, you stop thinking. You don't worry about anything. You've done your analysis, and now you're only waiting if there are traders who are seeing the same way as you and if they're going to come to the markets as well. They may not come. There's nothing you can do about it. No matter how much you will move your stop, no matter how much you will refuse to admit you're wrong, how much you will pray, there is nothing you can do about it. You will just set your stop loss in play. If the stop loss gets hit, that you read it wrong, your analysis was wrong, and you will take a losing trade. You will save the money, you will not move it, and you will take the winning trade on the next one. But you cannot move the stop loss, because you can see that if you put it anywhere else but 1 tick below the signal bar, you would have gotten stopped out. This is why you use the price action structure that helps you protect your stop 1 tick below the signal bar, and you would have survived easily. Your analysis was done. You're not thinking about anything. Right now, you're just folding your arms and you're waiting if other traders with the same intentions are going into the market and lo and behold, they came in the market. It was a quick, easy scalp. This was a great entry. Both of these setups are fairly decent. Market created even new high for the short-term uptrend, and from this point on, once you get a triple tap, double tap, triple tap, this is where I expected correction. This is where we cannot take long. It's not safe to take long entries. So I took first 2 trades. You guys can see perfect price action. It was really easy to read, and what a great day to come back after Easter. Since the market is pushing lower like this, I'm going to draw a slightly wider channel. I'm not going to draw the channel tight like this because I expect reversal. I don't expect correction. So as the price is pushing lower like this, we can reset the count here. We're resetting the count because we want to count for failed second entry long. So we have a new high, first entry long, push below EMA confirming bearish momentum, and we give a second entry long failure here. This is not a good entry to take. Why? Because notice how far this failed second entry long already moved, and you already bounce at the bottom here. You cannot take a failed second entry long once you're already pushed down here to this support. Now there's a lot of buyers coming into play and the momentum is changing. It's okay to take failed second entry long once we are on our way down before we reach this support. But once you already hit the move down, because this was the goal is to come from here, down away from here. We just need to find a high probability setup. Once we found a high probability setup, failed second entry long, this is where we can enter. But we already made the move down. We are already at the support of this range and buyers are stepping in, and you cannot take short so late. It already moved way too far down. So this failed second entry long, it's not great failed second entry long to take. In fact, you guys can see what would have happened. You're going to draw the short-term trend line. At this point on, you're expecting to get second entry short. Following the perfect trend line rule, you expect to get new low for this downtrend. Let's see what we get. But we pushed above EMA. We have a STEMI bars, not perfect bars. And I don't want to mark these entries because the bars are really odd. You closed above EMA. I was expecting to get a lower high. You're watching this. You don't get a trigger high. You just get a hidden lower high, which is not really entry. And market just continued pushing lower and lower without giving you an opportunity to take short entry. So there's nothing you can do. You cannot break the rules. You follow the rules. You follow the price action. You only wait for high probability setups. You cannot force the issue. The market is pushing lower, without any sign of a high probability setup. And notice how far the market is pushing. And notice how back into trading range you are again. You're coming from all the way up here from this triple top and you're all the way down here. And notice how you keep creating new lows and new lows. This is where I drew the bigger downtrend, because once you keep creating multiple new extremes, this is when you can start to anticipate that there's probably is a bigger downtrend in play. So once I see a structure like this, my goal is to wait for high probability setup. I'm just going to slightly adjust it. And what is the high probability setup? Two-legged pullback, in this instance, second entry short at the key entry point. So I ask myself, do I have the second entry short? I don't just yet. Do I have the key entry point predetermined? I do. So let's see if we get some confirmation of key entry point. And notice price created a new low. So this is where I reset the count for high probability setup. I have a first entry short, pullback, second entry short, where at 2 key entry points at this trend line that I predetermined earlier from the first 2 swings. First 2 swings set up the trend line, third swing, fourth swing confirming right here. In addition, I have EMA that acts extra confluence for me to take this entry. Second entry short break and attempt to create new extreme. Price cannot create new extreme for the uptrend because there are 2 key entry points that are holding price. And professional traders are selling at these 2 key entry points. So price is too weak to create new extreme. So this is okay. You don't have to get new extreme at this point on. And notice what a great textbook. Everybody took it. And it was a textbook entry for the day. This was the easiest trade for the day. And this is what I meant why today the price action was so easy. Because if we just look back and focus on what the high probability setup trading is about, you basically ignore all these odd setups that are far away from EMA, far away from key entry point. Notice how price is pushing down right here. You're not at the key entry point and you're just watching these setups go. And you always just lean back and wait for price come to key entry points. And once the setup is at the key entry point, that's where you're starting to think. And that's where you're starting to look for high probability setup. Notice price is pushing down without any clear setup. And that's okay. And once price is pulling back, to our key entry point where we expect for price to create some good high probability setup, that's when we start to pay more attention. That's where we start to think if there's going to be a two-legged pullback. So that's the beauty of this strategy, that you don't have to think constantly what's going to happen on the chart. Once you get a high probability setup, you generally don't get another high probability setup right after it. It takes time for high probability setup to develop. So this was a perfect textbook high probability setup alongside with multiples. You guys know I took 2 trades, and I like, you know, taking 2 or 3 setups. Today specifically, I like sticking to 2. So, you know, a little shame I didn't take this entry, but sometimes it can save me not having a losing trade. But sometimes, you know, I can miss a textbook entry like that. I really should have taken this trade because 2 key entry points, second entry short, great entry. Notice we have a first break for the downtrend. So we expect the same thing we did up here. We expect new high to be formed. We expect new low to be formed. But the market out of nowhere completely reversed higher without any good setup. Notice we have a new low, first entry short, pullback, second entry short failure. And we have a new high, first entry long, second entry long. I took a break at this point on, but watching this trade in hindsight, this is a great, because this is 2 setups in one, second entry long and a failed second entry short. But at this point on, you expect new low for this major downtrend, which was even confirmed right here. So it is really hard to take this long right here. If you took it and you understand that the market is reversing, then this is great. I would love to mark it, but according to rules, we expect new low for the downtrend, and it's a little bit too early to go long just yet. As the price is pushing higher, we're expecting to get second entry long at the key entry point, but notice we don't get no second entry long at the key entry point. We pushed below here, EMA, price pushed higher. Notice we are at this key level that we identify from this tripled top. Price created a confirmation of this trend line, but I don't like it just yet. It is not a two-legged pullback. It is a break and a new low. This is more aggressive, but this is not a textbook high probability setup. You would want to see price push above EMA and give you a higher low above EMA, but it never happened. Price pushed strongly to the upside, double top. This key level is holding price, and price now is getting a little bit wedgy. You get the higher low off the trend line, tempting below EMA, but you're getting close to this wedge, and then you get a new low, first entry short, second entry short, failure, new high, first entry long, second entry long. When I was watching this, it looked like you're going to have enough room to here, but it managed to close all the way up to here at these very highs. And when you're watching this, you cannot go long right here in this wedge, unfortunately. So this bar closed way too big, and then market strongly pushed below EMA. So there is no really great setup to capitalize on such a huge bullish move up. Unfortunately, price getting new high, first leg down, pullback, second leg down, failure. So this is a variation of a first entry long, second entry long failure below EMA. This looks like a reversal pattern, but this uptrend doesn't have a new high. So this is an aggressive entry. I didn't really like it at the time. Once price keeps pushing lower right here, and we keep creating series of new lows and lower highs, lower lows, this is where you expect to get a high probability setup, second entry short at the key entry point. But notice price just bottoms falls out of it, and there's no second entry short. Price is finally creating the break. We're finally at the EMA, so we expect to get second entry short, and we just get a first entry short that worked, and market reverse higher, and we're into the close without any setup. V-shape reversals without even reversal pattern chance for us to jump on board. So there really weren't that many setups in the other half of the day. The first half of the day was where all the money was made, and this is where the price action was the easiest to read. I hope the video was educational, and I hope you had a great day, and I'm going to see you guys in the next one. Take care, everybody.